Good evening. Good evening. What's up, everybody? What's up? Shout out to y'all. Shout out to y'all. Appreciate y'all joining. It is Sunday, May the 18th, 2025. How's everybody doing out there? Shout out to y'all. Let me get a quick roll call. Y'all shout out where y'all from. City, state, region, country, whatever y'all want to shout out. Go ahead and shout it out. Appreciate y'all joining. What's up, Ike? What's up, Malcolm? What's up, Lawrence? What's up, Ed? Shout out to y'all. We got some exciting news going on. The XRP futures are live. They're not tradable until tomorrow, but they are live. So we're gonna go ahead and cover that here shortly. What's up, Carrie? Shout out to you. What's up, Malcolm? We got Venice, Florida in the building. We got Chicago in the building. What's up, Tino? Appreciate y'all joining. Ike, it's been a while, man. What's up? What's up? It's been a while. Shout out to you. So let's come over to the crypto matrix. Let's go over, review some prices right quick, and then we're gonna cover these futures. They are live. If y'all just joining, they are live. XRP trading at 243. We just got a new weekly open. We just got a new daily open. It's currently Monday, so we're back up 243. Last week was a seek and destroy type of week where we just chopped around, volatile, very volatile. But as you can see, we're right back up, and I'm still bullish on XRP. I'm forecasting that we go higher this week. XLM currently trading at 29 cents. We got XDC trading at 7 cents. We got HBAR trading at 19 cents. Bitcoin, remember I said a week ago that Bitcoin would be breaking its all-time high soon. It's not far from its all-time high. Bitcoin is about to break out, so y'all stay tuned for that. I'm assuming Bitcoin is going to lead the way. So Bitcoin trading at 106,000. I believe its all-time high was 109,000. Ethereum currently trading at 2,400. Algo 22 cents, and Solana $171. Ike, you said it's been crazy. Got a promotion. They trying to bury you. Hang in there, Ike. Hang in there. What's up, Gabrielle? If y'all just joining, man, make sure y'all hit that like button for me. Subscribe to the channel. So let's go ahead and come over to the, let's see right quick. Let's come over to the CME website. This is the CME group, Chicago Mercantile Exchange. We've been talking about this for many weeks now, ever since they announced it. But the XRP futures are currently live on, they're currently live from the CME. The futures markets will bring liquidity. Well, yes, the futures markets will bring liquidity and pretty much set price discovery. If y'all don't know that, I reviewed that. I got that quote directly from the former CFTC chairman. He said it himself that the futures markets will set the, or the derivatives markets will set the price of commodities. So here we are, futures are live. That brings institutional capital to the crypto market. That allows them to speculate, buy, and sell both directions of the market. We're going to get into it. Even retail can participate. So that's what I'm trying to lean a lot of y'all into. Get away from meme coins, get away from speculative layer 2 cryptos. Let's come over here to the regulated environment where everybody can participate. And it's very rewarding. What's up, Daryl? Shout out to you. Appreciate y'all joining, man, on this Sunday. What's up, Trump Swan? Appreciate y'all joining, showing the love, man. Shout out to y'all. Shout out to y'all. So it looks like so far the XRP futures contracts, they are month to month. I'm used to trading quarterly contracts, so I don't know if they're going to bring quarterly contracts. But as of right now, The XRP K5. That's the current. That's the contract code. If y'all try to look it up on like TradingView, XRP K5, and we're currently in the contract month of May. This contract is about to expire on the. I believe it expires soon, and then we will roll over into June, the June contract, and then July, August, all so forth, all the way out to next year, 2026. Let me see right quick. If you're interested, now this ain't no promotion to a broker or anything, but initially they were saying that the futures contracts for XRP will only be coming to Robinhood. And then just yesterday, I discovered that they are bringing futures contract. Well, this is my one of my brokers that I use, which is TradingView. So if y'all are interested, and y'all do know I'm going to be coming out with a signal service for these futures contracts. And if you're interested in signing up with a broker to be able to trade futures, this broker right here, which is TradeStation, this is one of my brokers that I use. They're integrated with TradingView. And they are offering micro XRP and XRP futures. Now, if y'all didn't watch me yesterday, if y'all missed it yesterday, the XRP, the full contract, the large contract, they require you to have $64,000 in a broker account just to trade this. So put that in perspective. I got it highlighted right here. If you can zoom in on your phone or your device or on your television, whatever. XRP, this is the full contract. They require you to have $64,000 just to trade it. So what does that indicate to y'all? That this is for institutions and high net worth individuals, right? Now, some of y'all are going to be crypto wealthy, and this 64,000 will be nothing for you. But again, just be aware of that. Like, and I was covering this before. I was talking about this when I was looking at the specs when they started first releasing the specs for these contracts, and I was going over the tick size, and I was like, man, this is going to be very expensive. Well, they're requiring you to have 64,000 in the account. Now, for us retail, we're considered retail. We're not high net worth or institutional investors yet. I say yet for the high net worth, but if you are interested as a retail person who wants to trade futures in a regulated environment, this isn't no exchange where it's not regulated. They're using USDT and they won't pay you out. If you make profits, they won't pay you out and they'll take your money. No, this is a regulated environment. It's safe. You can sue the hell out of them if anything happens. So, and they're regulated by the CFTC. But for the micro XRP, which I'm going to be mainly focusing on because it's affordable for the average person, for this particular broker, they require you to have 3,200 in the account. Some of y'all have that. That might be extreme for some, but that's not a lot of money. So when I say requirements, this is just to fund the account. Because you're using this for leverage. So they require you to have a certain amount in the account to be able to take out certain contracts. So these micros is what majority of y'all that are watching should focus on. The micro contracts. Don't worry about the full size contracts because that's the big boy. That's for the big boys. Now, from a charting perspective, all the charts will be the same. The only difference is the pricing of the contract. So hopefully y'all understand it. Let me read some of these comments right quick. What's up, B Rush? Appreciate you joining. You said that bullshit? Yeah, for sure. Barton K, you said you just signed up 2 days ago with TradingView. Okay, TradingView is the charting platform. Now you need to sign up with a broker, which TradeStation is the broker. They're based out of Florida. So I've been using TradeStation for years because I trade the S&P and the NASDAQ. This is one of my brokers that I use, that I come to trade the futures markets. B Rush, what's up? You said, boss, we getting to that money for sure. You already know we getting to that money every day. Every day is about that money. Every day is about that money. Yes, TradeStation is great. I've been using them for years. It's a regulated environment. They're up to date. Again, they snuck this out of nowhere. They put this, listen, I've been checking this platform or my broker for years. I mean, for months, or ever since they came out with the CME Futures. I was checking them to see if they was going to add it. And here in the last minute, the last hour, they added it. I believe a day or two ago, they added it on their website without even saying a word. They went ahead and added this to their website. So they quietly added it. And initially, they only offered 4 products. They offered Bitcoin, Ethereum, micro Bitcoin, and micro Ethereum. That was only 4 products that they offered for futures, for crypto. And then here recently, they just added micro XRP in the XRP. Now, if you look at the if you look at the Bitcoin futures contract, they require you to have 34,600 in the broker account. I'm gonna repeat it again. The CME Bitcoin futures on this platform, which is this broker, they require you to have $34,600 in the broker account just to go trade this. That's a lot. That's a lot of capital for most people. Just to put in an account just to trade a futures contract. And then Ethereum, they required you to have 11,400. But then here we are, XRP, the requirement for it is 64,000. Doesn't that say a lot that they require you to have way more, double the capital than Bitcoin? They require you to have double the capital for XRP futures than they do for Bitcoin futures. So that's insane. That's insane. And then if you compare the micros, the micro Bitcoin, and again, everybody that's watching me, y'all are going to be in the micro ballpark. I wouldn't advise nobody, unless you're a high net worth individual or you know what you're doing, don't play with the larger contracts. Everybody that's watching this should play. If you are interested in trading futures, stay in the micro ballpark. And micros are very powerful. Do not, just because it says micro, don't sleep on the micro. Micro contracts are very powerful contracts. I trade micro contracts all the time. I'm always trading the micro S&P. I'm always trading the micro NASDAQ. Those are my 2 favorite markets. I trade them every day. Just go look at my channel. I got trade examples of me trading those markets. But for the micro XRP, well, for the micro Bitcoin, they require you to have $705. That's doable for most people. In the micro Ethereum, they require you to have $94. That's doable. But then when we jump up to the micro XRP, they require you to have $3,200. So that says a lot about what XRP has going on. And again, if y'all joining, y'all don't know nothing about futures, this is a cash market. This is where you go leverage, take risk. But if you know how to trade like I do, you know the skill set, you have a foundation, you know, you pretty much know how the markets are repeating, and you have a what I'm trying to say, you have a strategy. If you have a strategy that you picked up or you learned from somebody and you know what you're doing, then it doesn't matter what you trade. That's what I'm trying to say. It doesn't matter what you trade. Let me read some of these comments. Ike, you said, what is less than XRP? Are they saying Bitcoin is not worth as much as XRP? Barton K, they're not saying it, but it's obvious that XRP has more value than Bitcoin. That's pretty much what they're saying, to be honest, without saying it. Just by making you have to have 64,000 in the account just to trade Bitcoin. I mean XRP. So for y'all that hold the digital assets, I always say, hold on to that shit forever. There's no point in selling it, especially if you know how to come trade. See, I'm no longer worried about the long. Excuse me. Let me take that back. I'm worried about the price action. I keep up with the price action of spot XRP. That's the digital asset that y'all buy. I keep up with that every day. I am concerned about that. But learning how to trade removes all that anxiety, removes all that stress, because it's giving you something else to do. Trading gives you something else to do. It's a cash market. So if you have a certain strategy, you can go build up your capital like you are working a 9 to 5. Y'all see me do trade examples all the time, especially y'all that join all the time. So futures trading is a cash market that I like to participate in to build capital. I take that capital that I earn from trading, and then I go buy assets like crypto, like gold, like silver. And then eventually one day, and it's again, my career is still going on. I'm still early in my career with trading. Like I'm trying to still strive to meet certain goals, but eventually you can learn how to trade and go earn 6 figures in a week. That's where I strive to be going at some point. My future goals as a trader is to be able to make 6 figures in a month, 6 figures in a week. And then once you're making that type of capital, you're clearly making millions of dollars. Once you make that kind of capital, then you can go buy assets like real estate. You can go buy different assets. So these markets, if y'all don't know, the derivatives market is the largest market on the planet. I don't care what industry you're in. There's more capital flowing through these markets, which it doesn't require you to go clock in at a job. It doesn't require you to do labor. Well, it is some type of form of labor because you got to analyze and you got to be able to predict and forecast price. But these markets are the largest because the rich and the wealthy, they don't work jobs. Y'all know that, right? The rich and the wealthy, they don't work jobs. So what do? They go play these markets, and these markets have the most capital, the most funding in the planet. There's nothing more liquid than these markets. So to be able to go make high earning capital, high earning income in these markets is doable. To be able to go do that every week, every day, it might scare some of y'all. If y'all never traded these markets, it might scare y'all how quickly you can make a lot of money quickly. So, but that's just the financial markets. Let me see you right quick. Let's read these comments. SBG, berries, micros, greater than minis. I'm not going to say that, SGB. I'm not going to say that. It's based on your equity. They're safer. So if you're somebody who has, and when I say that, is the price, the charts don't change. The charts don't change. Like the micros versus the minis, it's the same exact charts. It's the same exact price. The only difference is it's price different. The micros are more affordable for retail. The minis are more affordable for high net worth individuals, businesses, corporations, institutions. So once you can become a high net worth individual and go participate in the minis. None of them are greater than the other. Malcolm, you said the other ones require more than BTC. Wonder why? For sure. Why is it less than Ike? You say why is it less? I mean, Leviathan, careful, boss. Don't let the cornbread heads take your info. Shout out to y'all, man. Shout out to y'all. So, y'all press 1 if y'all understand that, man. Y'all press 1. If y'all are interested, come over to Trade Station. They are integrated with TradingView. If y'all plan on, once I go live with my signal service, if y'all are planning on doing futures trading, this is the broker I'm going to try to tell y'all to go through. I can't tell y'all what to do, but this is the broker that I want to lead y'all to sign up with so that y'all can go participate. And remember, for the micros, you need to have initial capital of 3,200. Okay, shout out to y'all. I'm going to move on. So with that being said, right here, this is XRP Futures. This is the May contract. It just went live today. It's not trading though. It's not trading. It's live. This is the May contract. It's directly from the CME. If y'all look up here in the top left, right here, where I got my cursor, it says XRP Futures, May 2025. This is the 1 hour time frame. This is the CME. And then when you go to this little green button right here, the market is open. So right here, it says market open. and it closes in 20 hours. So this is not a 24-hour market. So if y'all don't know, futures aren't 24 hours yet. They're not 24 hours yet. They plan on going 24 hours, but they're not 24 hours yet. So they're still traditional. So it goes live tomorrow. So let's come back over here right quick. Let me come back to the CME. Yes, I mean, it's live. It's live. It's live. It's just not trading. So we might have to wait till Monday in the United States for it to open up and go live. So it's definitely live. Let me see right quick. It's definitely live. Let's go down to a 5-minute time frame. Let's go down to a 5-minute. So that's what it looks like. So right now, I'm not interested in this. You know why? Because it's not liquid. There's no liquidity in here yet. It just went live. If y'all been watching, I covered the Nano XRP from Coinbase. That's a futures contract from Coinbase. It went live. And I think I got it. Let me pull it up right quick. I'm going to pull it up. Nano XRP right here. Nano XRP. So this is the Nano XRP, and this is a daily time frame. So as you can see, it's taking time for the liquidity to build up in market structure. So we're not going to just jump in this right away. We're not going to just jump in the XRP futures market right away. For example, let's go look at what I normally trade. Let's go look at the NASDAQ. I trade this every day. If you look at the NASDAQ, you can see the market structure. There's liquidity in this market because it's been trading. It's live. It's been trading for years. So it's more market structure. Do you see how clean price is? There's more market structure in the market. Now we have to wait. This is a brand new market. So we have to wait for this market to build market structure, and we need institutional capital to come in. So in the meantime, while we wait for institutional capital to come into this market, I probably will be offering signal services for the NASDAQ and the S&P. Y'all press 1 if y'all are interested in that. Y'all press 1 if y'all are interested in trading the NASDAQ and S&P. So, what else? Let's see right quick. Okay, shout out to y'all. I appreciate it, man. I appreciate it. I definitely, I'm looking into it now, trying to set it up. All right, that's the futures market. So I told y'all about the broker, Trade Station. Futures are live from the CME. Now let's come over here and look at XRP for the week. This is not the futures market, so don't get it confused. This is not the futures market. This is XRP. Let's take y'all out to a higher time frame. This is the monthly time frame. This is the monthly time frame. Y'all smash the like button for me. I got 30 people in the building, 16 likes. Smash that like button, subscribe to the channel. Smash the like button, subscribe to the channel. If y'all want to learn how to trade, link is in the description below for the Patreon. We have 13 days left, 13 trading days left in the month of May. 13 days. So we got 2 weeks left. Let's go ahead and look at the economic calendar. So this is the economic calendar for the upcoming week. As you can see, we have no economic news Monday, Tuesday, Wednesday, but we have the stablecoin stuff going on in Congress. We got that going on Monday, which is tomorrow, and the CME opens up tomorrow. So we got that as well. Tuesday, and then you gotta factor in the unseen, the unseen factors that may play effect. You never know what can happen with the court case. You never know. They might say, okay, we getting it, or stablecoin bill can pass tomorrow or this week. We shall see. But there's light news Monday, Tuesday, and Wednesday for the traditional economic calendar. And then May 22nd, Thursday, we got some high impact news, and then it's pretty much a light week. It's gonna be a light week in the market. You said U.S. credit rating downgraded. And that shit been downgraded, man. We been in the dumps. We never had good credit. Nah, but shout out to you, Lenny. So it is a light week on the economic calendar. Let me go ahead and forecast into next week, which is the last week of May. And Monday, May 26th, that is Labor Day. Memorial Day. So Monday, May 26th, Memorial Day. It's a bank holiday. So on bank holidays in the markets, lower your expectations. Don't expect nothing, especially in the futures market. Now that we have futures markets and futures contracts on live on the market, the markets are going to be way more controlled. So I'm just letting y'all know it's going to be more controlled, more manipulated, because now institutional players are in the market. So just pay attention to that. So Monday, May 26th, bank holiday, and then after that following week, which is next week, which will be the last week of the month of May, we got a lot of high impact news going on in the market. And then let's go ahead and take a peek at June 1st. And in that first week of June, expect a lot of volatility because we got non-farm payroll, we got PMI claims and data and all that. We got a lot of high impact news going on June 1st. So that first week of June, I'm going to be tapped out because I already know the market manipulation that can happen during this week right here. So be paying attention to that. Non-farm payroll stands for not for professionals. So XRP currently trading at 240. This is a monthly time frame. We got 2 weeks left, 13 days to complete this candle. We already did a lot of damage. We took out last month's high, and again, they pretty much pump faked y'all last week. They did a number on y'all psychological last week in the market. So let me highlight the ghost pool that we're currently trading in. That's a 3-month ghost pool. So if I drop out to the 3-month time frame, if you look at this large wick right here, that is considered a ghost pool. That's a PD array, which stands for premium discount array. And this is a hidden level in the market. You can see where we're hanging out at right here at the 0.75 level of this wick. So what I'm doing is I'm measuring this wick. Don't ignore wicks in the market. We always want to pay attention to large wicks because price refers to those levels. So look at this large wick. We're just hanging out right here at the top of that ghost pool. What's up, Foundation? Appreciate you joining. If y'all just joining, man, make sure y'all subscribe. 40 people in the building. I got 40 people in the building, 17 likes. Y'all can do better than that. Hit that like button for me. Subscribe to the channel. If y'all just hanging out in the back, in the bushes, go ahead and hit that subscribe button. Comment. If y'all hanging out in the bushes, leave a comment. Come on, don't be ashamed. Come on out. It's Sunday. We having church. It's Sunday and we're having church. So come out the bushes and come to the front of the congregation. There y'all go. Come on out. Come on out. So we're hanging out right here in this PD array. So if I drop down to the monthly, we're hanging out right here at the top of this PD array. This is a 3-month ghost pool at 0.75 level. I am still bullish. So what I'm concerned about right now, or where do we close in 13 days? That's what I'm trying to figure out. And I'm going to take a quicker, closer look once we drop down intraday. Where do we close in 13 days for this month, the month of May? Next, I'm going to drop down to the weekly. And y'all should know, if y'all don't know, every monthly candle, pay attention. Every monthly candle has 4 weekly candles embedded inside of it. Price is fractal. It's a matrix. Price is fractal and it's like a matrix. So every monthly candle has 4 weekly candles inside of it. So I'm about to drop down to the weekly, and we already know we got 2 more weeks in the month of May. So look how we open up. We just began a new week of the 3rd week of May. I'm gonna go ahead and remove this right quick. We're in the 3rd week of May. Each one of these candles, pay attention. We know that we got 4 weekly candles in a monthly candle. Y'all in the chat, how many candles are embedded in the weekly candle? Test y'all knowledge right quick. How many candles are embedded in the weekly candle on the weekly time frame? Waiting for y'all to participate. Yes, hit that like button, y'all. Hit that like button. Shout out to y'all. 40 people in the building. Shout out to you, B Rush 7. Shout out to you, Daryl. Shout out to you, Excalibur. Shout out to y'all for paying attention, man. I love the participation. That makes this fun. That makes these live streams fun and engaging. And it keeps y'all fresh. It's teaching y'all. Yes, thank you, Malcolm. So if y'all are trading the traditional markets, there's 5. Like the futures market, there's 5 candles on the weekly candle because it's just a 5-day market. But in crypto, it's 7 candles embedded in the weekly candle. So look how we just opened up. We just opened up. So if y'all don't know, bearish candles open up at the top. They create a little high and then they go low. That's a bearish candle right here. Bullish candles open up at the base. They drop low, then they go high. So there's 7 candles inside of this, and we just began the new week of trading. So what's our weekly bias? What's our weekly bias? Y'all in the chat. What side of the market, based on higher time frame order flow, what side of the market do y'all see price reaching for? What side of the market do y'all see price reaching for? B Rush, you say you're bearish? So you're picking the sell side. So a simpler question is, are we going to come up and take out the previous week's low? Or do we come up and take out the previous week's high? Because we're inside of this range right here. And if you don't know, this happens every single week. And then occasionally we don't do it. Like this candle right here. You see this candle right here? We didn't take out the previous week's high or low. We just ranged inside of this weekly candle right here. And that's considered a inside range week. And then the next candle went back to normal. It opened, took out the previous week's highs. And then occasionally we just hold price inside of a range. But I'm always going to pick the side of picking a direction. Are we going to take out the previous week's high or low? So Lawrence, you say high. Malcolm, you said setting up for a move. Daryl, you say previous week's high. Ike, you say you're going to go with this week's high. Okay, we got a lot of people saying this week's high. Okay, so I'm going to go ahead and tell y'all my bias, and this is considered bias. So you want to have a bias. There's also something called narrative, which I have to show y'all what the narrative is. I might say that for the Patreon, but you always, every week, if you're just brand new to technical analysis, and you want to learn how to day trade, because I'm a day trader. I'm always going to lean to the side of day trading, even though I do long-term investing with these crypto assets. But everybody, if you watch my channel, I get into technical, like I get into a deep dive technical analysis. It's not no walkthrough. It's none of that. It's like real deal, like PhD level technical analysis. That's what I'm trying to say. It's like a PhD level technical analysis. So you can see we already opened up. Hold on, got some comments coming in. Trumpet Swan. He said neither going sideways. Okay. Sell side, Lenny. Okay, shout out to you, Lenny. Now there are weeks. Check it out. Listen closely. There are weeks where we can take out both sides of the market. I see them all the time. We can come down. They can scare the hell out of y'all. Take out the sell side right here and then reprice price to go higher and take out the buy side. That's manipulation right there. They do that all the time in the market. They will clean out both sides of the market, take out the liquidity. So people that are going long, you got leverage traders trying to go long. And then once these CME futures go live, you're going to see way more of this. But you got a lot of leverage traders because of the hype, because of the announcements. They're taking leverage trades. I go on YouTube and see people going live trying to trade XRP all the time, and they're just leverage trading without stop losses, which is crazy. So they don't know about the manipulation in that market. The markets are algorithmic. So once they take that long position and then check it out, people are scared to go short, which is crazy. They have all the heart in the world to take a long position, but they will be scared to go short in the market, which is, I find that interesting. But there's a lot of people trying to go long. So market makers can come down and take out all that liquidity from them long positions. They either can take out their stop losses or pretty much liquidate them completely. So there's a lot of that going on. And if you're bullish, you see, if I'm bullish, I want to see price get cleaned out, and then I want to buy at a discount. If we're bullish, which I'm bullish this week, I want to see some type of retracement down to a PD array, which is a fair value gap, a sell side liquidity pool, some type of PD array to offer me a discounted opportunity to get long for the week. So hopefully y'all understand that. Ike, you said the weak volatility with BitMax announcement up. Yeah, it's not bull or bear market. It's a what market? I got you. So, okay, my weekly bias. Let me go ahead and show y'all my weekly bias. At minimum, I want to take out last week's high. At minimum, I want to take out previous week's high right there. Boom. I'm aiming for that high. Just above that high right there on lower time frames, you can see these highlighted rectangles. Those are lower time frame premium targets. And I'm going to show y'all here in a minute. So that's my bias. Let's go down to the daily. On the daily time frame, we're retracing currently. Y'all tell me in the comments what you want to see is a swing. You see the swing low right here, the swing low pattern. How do you define a swing low? There's a candle right here that creates the low. You want to see a candle to the left of it, to the right of it. That's a swing low pattern. And now we're trading down to what? What is this right here? Y'all tell me in the chat. What is that right there? What is that right there? Oh, y'all might can't see it. Let me hide that comment right quick. Okay, there y'all go. Okay, shout out to y'all. I didn't realize y'all couldn't see it. Yes, that's an order block. That's a bullish order block. The opening price of that candle is a bullish order block. So that's a target that we can trade down into. Also, we already determined our weekly bias, right? We determined where we want to see price go up this week. So there we are right there. You see where my target is right there? That right here was last week's high. That swing high right there. That was last week's high. I want to see us get back up to there this week. Now, I'm comfortable with being wrong. I'm comfortable with being wrong. That's part of the game. That's part of the game. You're going to be wrong. You're not always going to get it right all the time. So who else is going to be transparent with that with y'all? Who else is going to tell y'all straight up and be transparent that you're not going to get it right all the time? And that's okay. Because guess what? I teach y'all how y'all can adjust and get in sync with price action if you get it wrong. I got it wrong last week. We traded down to these levels right here, and I wanted to see price bounce up and go higher, but we didn't. So what we did was adjust, and I showed y'all opportunity for price to go lower. So you see this right here, this BISI, we worked on that last week. We worked on that several times. We traded down to it, 1, 2, displacement higher, and on lower time frames, this is just sideways consolidation. Last week was a seek and destroy week where they liquidated both sides of the market. They took price higher. They came up, took out these old highs back here from March, traded higher and took those highs out. And then they offloaded the long positions and went short intraday. That's the beauty. It's beautiful once you learn how to trade those derivatives contracts, because once you learn the skill set, there's opportunity on both sides of the market. There's always opportunity. There's opportunity right now during the Asia session. There's some type of opportunity going on. I'm gonna show y'all here in a minute. But for daily bias, we already determined our weekly bias. Monday has already started trading. Pick a side. I want y'all in the chat to pick a side. Do y'all see price taking out Sunday's high or coming down, taking out Sunday's low? Because we all know there is liquidity above old highs and old lows on all time frames. All time frames, you can find liquidity above old highs and old lows. The higher time frame is the most significant. It has more influence over price. So I'm always going to key off of those higher time frame levels, the monthly, the daily, the weekly. I'm always going to key off of those levels, monthly, daily, weekly. So Lenny, you said you're going to come down. You want to see price come down to take out yesterday's low. Okay. Before we get there, there's an order block in here on the daily. But once I drop down the lower time frames, I guarantee there's some type of level in here somewhere. I just came to my charts. I ain't been to the charts all day. But I guarantee there's some type of level in here that price is reacting off of. And we're going to take a closer look here in a minute. So once we go below the daily time frame, anything below the daily is what? Y'all tell me in the chat. Once we drop below the daily, how do we view price? Because the monthly, weekly, and daily are long-term charts. But once we drop below the daily, we're going to go look at what? Yes, shout out to you, Daryl. We're going to be looking at intraday price action. So keep that in mind. Higher time frame narrative. Once we drop down to lower time frames, we're going to be viewing the market from an intra-week, intraday perspective. Before I do that, I want to measure and see what we did in the last 20 trading days and find our dealing range. So let's do that right quick. Let's find our dealing range. Y'all should learn this in the Patreon. Sign up in the link is in the description if y'all want to learn how to do this. But I'm going to start on the current candle and I'm going to go back 20 trading days. Right there. So that right there, this highlighted area right here, that's the past 20 trading days. So the thing I want to do is find the highest high and the lowest low in that range. We're going to find the highest high and the lowest low. So the lowest low will be right here. That's the lowest low. And then the highest high, which is right there. That's what I'm targeting right there this week. And then next thing I want to do is I'm going to take a Fibonacci. I'm going to drop it from that low up to the high. That's our dealing range. That's the dealing range that we're in on the daily. So this is a higher time frame analysis to allow us to understand where we are in the market. So y'all in the chat, are we in a premium or a discount market right now based on this dealing range? Based on this dealing range, are we in a premium or a discount? Y'all tell me in the chat. Shout out to you, Lenny. And then, okay, tell me why. Give me a brief description why we are in a premium. Yes, we're in a premium, but why are we in a premium? What makes us in a premium? I appreciate the participation, y'all. Shout out to y'all. Yes, Daryl, we're above the 0.5 level. So if y'all don't know, this Fibonacci is measuring the range. Anything below the 50% level is a discounted market. Anything above it is a premium market. So we're currently, look, check it out. We want to be buyer. Okay, we know if we just zoom out right quick, if we zoom out, order flow has been what? Let me show y'all right quick. If I take this trend line from this low right here up to that high. This low was when we dropped down into that 3-month fair value gap. Let me show y'all what that looks like. I'm going to drop out to the 3-month time frame. So that 3-month time frame, let me slide it to the right. This highlighted area was that 3-month fair value gap. We dropped down there. That was a great opportunity. If y'all missed it, oh well. But if you got it, shout out to you. That was an opportunity to buy XRP at $1.61. Some of y'all took advantage. I called this 1 month ahead of time. And we seen it play out. They offered it one time. It didn't take long, and then boom. So let's go back down to the daily, and I'm gonna show you how this price, how the market dropped down into this, and now it's currently trading higher. So let's go back down to the daily. Just like that. So this was that drop down. So when price was doing all this choppiness, but it was going lower, that was that drop down into that gap. Look at the precision. You can't make this shit up, man. You gonna become a sniper over here on my channel. You're gonna become a sniper. Look how the bodies of the candles respect the top of that fair value gap on the 3-month. 1, 2, 3. Give you 3 opportunities. Boom, displays higher. Now price has been what? It has been bullish. It has been bullish. We are in a buy program. This is a buy program from that swing low up to that swing high. What's above the market? Liquidity. Old highs where they left behind pending orders in the market. And as traders, that's where we want to go for targets. As traders, that's what we want to see price reach for targets. But this is a daily time frame. This is still a long-term time frame. So we have to deal with different ranges, which is the past 20 trading days. right here, past 20 trading days. You do this every day. Every time the market prints a new candle, you just refer to the past 20 trading days. It's simple. Find our dealing range. Swing low, swing high. We're in a premium. We want to be a buyer at a discount. So whenever we expanded higher and we traded and took out these old highs over here, which is liquidity, these old highs, pending orders, liquidity, see how we target that? Sweep them. Look at the precision. We go up there, sweep them, and then market breaks down and it goes back internally. It retraces back down into internally inside of this range that we're currently in. This is internal range liquidity. That's what it's called. There's external range liquidity and there's internal range liquidity. I go over that in the Patreon. Y'all hit the link in the description if y'all want to learn what that is. So we go back and down into the range, and this is the narrative. So I taught y'all bias, but this is also narrative. There's always a narrative in behind price. So we trade back down internally. They offer institutions and smart money want to buy at discount. So look what they do. After taking out that high, they retrace back down into the range. They drop it below the 50% level, which is the midway point of the range. Anything below it is a discount. How many times do they offer y'all a discounted opportunity once we retrace back down? 1, 2, 3. On this third one right here, they drop it down to this discount array, which is a fair value gap in the form of a BISI, buy side imbalance, sell side inefficiency, which is a opportunity for you to set limit orders inside of this highlighted area. Am I confusing some of y'all? Am I going too deep for y'all, or are y'all catching on? Are y'all keeping up? Y'all press 1. Y'all let me know in the chat. Is this like, is this too much, or is it, are y'all keeping up? Is it too much, or are y'all keeping up? Y'all let me know in the chat. But we drop down, offer a discount opportunity. Okay, shout out to you, B Rush. Shout out to you. So, all right. Appreciate it. We drop back down. Institutions want to buy at a discount. They don't want to buy at premiums. They want to short at premiums. They want to be buyers at discounts. So they offer the discounted opportunity. Now, we can come back down lower and you can divide the premium range. So, for example, let me take a rectangle. Let's take a rectangle. From the top of that wick up there to the bottom at that 0.5 level. That's the premium side. That's the premium side of the range right there, that highlighted area. And then if I take another one at the 0.5 level and drop it down to the low of the range, that's the discount side right there. So essentially, one second. Okay, right there. So essentially, that's the range right there. You see that? That's the dealing range. And by color coding it, you can determine if we're in a premium or a discount range, just like that. And then do you think it's random? My bad. 1 second. At the midway point, so at the premium side of the range, which is the pink highlighted area, look at the midway point. That's a significant level of the premium side. So we're still hanging out near discount, but we're in a premium. So if we take the premium side of the range and we divide the premium side, below it is more of a discount premium. You get it? Below the midway point is a discounted premium. And then we're hanging out near fair value, which is the 0.5 level. That's the midway point. We're hanging out near the 0.5 level. But as we move higher, and let's say we start to come up to the midway point of the premium, and we go above it, that will be a deep premium. And if order flow is bullish, we most likely will continue higher and break out and continue higher. But if they want to come back down, some of y'all said we all are bearish. If they come back down, then they can come down, take out sell side liquidity, and then come back down into one of these PD arrays at discount. So hopefully that's making sense for y'all. Look, I haven't even dropped down intraday yet. I haven't even went intraday yet. I just had to give y'all that narrative right quick. And now I'm about to drop down intraday. So let's go down from the daily down to the hourly. Now we're no longer looking at the market from a higher time frame analysis, a higher time frame perspective. Again, there goes that range again. But now we're just intraday. We're just intraday. Let me throw up my dividers. Right there, we just began a new week of trading. And on the hourly time frame, y'all tell me in the chat, especially y'all that are in the Patreon, what's the first thing y'all do once we drop down intraday? What's the first thing that we do? What's the first thing that we do once we drop down intraday? I kind of want to clean some of this up. So what I'm going to do is I'm going to hide some of it. Let's hide some of this. Hide some of that right quick. Clean that up right quick. Yeah, shout out to you, Malcolm. We want to highlight the liquidity. We want to find where the liquidity is. And to make it simple, you just want to identify last week's high and low. Let me hide this right quick. Let me hide the daily dividers. And you want to identify last week's high and low. So this high right here, this was last week's high. That's where I want to see price reach for. This stuff repeats every week. So every week you can anticipate price reaching for either previous week's high or low. Every day you can anticipate price reaching for previous day's highs and lows. So this stuff repeats every week, every day, every month. It does not stop. It's coded. It's coded. It's an algorithm. It doesn't stop. Once you see this repeat over and over again, then you have an advantage in the market. Once you start to see things repeat over and over again, you start to have an advantage that most people don't even have, not even aware of. So there we go right there. Last week's high. And then what makes this super bullish for me, because we have, check it out. I don't think I told y'all this one before. But whenever you see equal highs and vice versa for equal lows. So you see right here, we got this high right here, and then this high that is relatively equal to that high. That's the term for it. Relatively equal highs. Anytime you see relatively equal highs, what do y'all think in the chat? What do y'all think that means? Y'all tell me in the chat. And especially if we know this is where the liquidity is. What do y'all think that means? Once you start seeing highs stack up on top of each other, what does that indicate? Y'all let me know in the chat what y'all think. What does that indicate? Yes, that's an important area. But what I'm looking for something specific. So let me go ahead and tell y'all to save some time. I'm going to tell y'all. Whenever y'all see relatively equal highs or lows, that is them leaving. They're stacking liquidity. They're stacking a bunch of orders. They're stacking those orders. So there's more liquidity around equal highs or equal lows in the market. There's way more liquidity stacking. For example, before we trade it down just like this, I'm going to take this right here. You see this low right here? That low. That swing low right here. You see that? Below that low is sell side liquidity. That was the low from last Sunday. And then over the weekend, we traded down there. So this low, and then look at this low right here. And maybe I need to, let me remove this right quick. 1 second. I'm going to remove that. Clean up the chart. So look at these lows. This low right here and this low. They're equal. They're not relatively equal, but they're equal. So let me draw a trend line right quick. So from this low to that low right there. That's what I'm trying to reference right there. That low to that low. That's relatively equal lows. So what does price do? It wants to seek that and attack that. And that's exactly what it did on Friday. It dropped down and attacked this low right here. And it attacked this low right here. And then it did some more damage. Even attacked all these lows back over here. So if I stretch this out, look at this low right here. If I stretch this out all the way to the left, look at that low right there. And then we did more damage by dropping down to this low right here. All up in here. So again, price seeks liquidity. I'm always going to be on the side of seeking liquidity. So that was the attack, the sell side liquidity below the market. And so now we're starting to see buy side liquidity start to stack up. We already understand the higher time frame bias and narrative. So after taking out orders below the market like we did right here and dropping down to a daily PD array, which is a discount, we're also hanging out in a premium range. We're on the premium side of the range after dropping down the discount. I'm forecasting that we go higher and reach for the liquidity above the market. Sticking to that higher time frame narrative. So we identified last week's high and low. Now I want to drop down a little closer in price. I want to look at the daily ranges. I want to look at the daily ranges, which is the previous day's highs, the previous day's ranges. And I'm going to find the previous day's highs and lows. So I'm going to go ahead and set up my chart for the upcoming week. These vertical trend lines, all I'm simply doing is dropping them on 12 o'clock midnight for each day. 12 o'clock midnight starts the beginning of the market each day. 12 o'clock midnight, New York Eastern Standard Time. If y'all didn't understand what I was saying earlier, just a minute ago, how whenever you see highs stacking up, look at this high. It's not random that this swing high formed and this displaced lower. No, this was the high from Wednesday. This was the high from last Monday. They created relatively equal highs. That was previous day's high right there. And all I did is stretch it out into this week. And you can see all those orders stacking up right there. And then I'm going to keep doing this every day going into the end of the week. And then again, this process repeats every week, every day. It doesn't stop. So, okay, let's stop right there. Let's stop right there. So far today on Sunday, do y'all think it's random? We're gonna start looking at intraday price action. So far, this is Sunday. We started this vertical trend line, 12 o'clock midnight Sunday, starts the new week. We open up, out the gate, we trade higher. We come up, take out the highs from Friday. We take out the highs from Friday, which is buy side liquidity. And do y'all think it's random that price trades directly to that level right there and then breaks down? Do y'all think that's random? I don't think that's random. I see this stuff repeat every day, every week, and it doesn't stop. So we took out the buy side liquidity right there. And it's Sunday, so we don't typically trade Sundays. We just let them have Sundays. So don't get excited from. Sometimes Sundays can be out the gate trading in a certain direction, but most of the times they some type of manipulation going on if price just out the gate trades higher on a Sunday. Most of the volume and most of the liquidity comes in on Monday, Tuesday, Wednesday, Thursday of the week. Let me refresh. My bad. What the hell just happened? One second, y'all. All right. Like I said, most of the volume comes in Monday, Tuesday, Wednesday, Thursday of the week. So right now, so far this week, we got a lot of volatility. I forgot what this was right here. Let me, it's an order block. I think that's that daily order block. So let's go out to the daily. And what I'm gonna do is I'm gonna hide this. You can see what price is doing after taking out what? Previous day's high. This is the daily time frame. I had to zoom out. When in doubt, zoom out. We took out the previous day's high, close right here, and now we opened up on Monday, trading down lower, reaching for opening price of this candle right here. So let's go back down to the hourly, and then now I want to go down to the 15-minute. Let's go down to the 15-minute time frame. Now we're looking at price from an intraday perspective. We're just focused on right now the daily range for today, and we're going to look a little closer in price. It is currently the Asia session, so whenever you drop down to the 15-minute time frame, now you're starting to look at the sessions of the day, the sessions, the kill zones. So Asia begins at 8 o'clock p.m. Eastern Standard Time, 8 p.m. Eastern Standard Time to 12 o'clock midnight. Currently Asia session. And like I said earlier, there's opportunities all the time. On all time frames, there's always an opportunity going on. So look what we just did right here. We traded up into this. What is this in the chat? What is that right there, y'all? Tell me in the chat. What is that? What is that right there? 15-minute PD array. What kind of PD array is it? Yes, it's a SIBI. It's a sell side imbalance, buy side inefficiency. Price is algorithmic. You can see how we trade up into that. Trade up into that. If you wanted to be short in the market, and you wanted a guaranteed fill, a guaranteed limit order fill, you set your limit order at the bottom of the fair value gap. It's going to give you a guaranteed fill. If you want a deeper premium to get short, the midway point of the fair value gap. If you want a super deep premium, which I rarely set my limit orders up there because I always want to get a guaranteed fill in the market. But if you want a guaranteed fill, a deeper premium, you set your limit order at the high. But I mainly check this out as well for fair value gaps. Whenever you want to see price go correct on your side, you want to see it stay below the midway point. Whenever you want to see fair value gaps work correctly, you want price to go up to the midway point and stay below it, like it is right now, like it just did. Now we're trading lower. This right here is that order block on the daily. That trend line right there is the order block on the daily. You can see it's trading down to it. It is currently 9:15, and price is bearish. Let's go down to a 5-minute. We're session trading. We're inside of the Asia session. We just seen a market maker buy model right here. Y'all see that? Market maker buy model going higher. And now we're retracing back down to the daily fair value gap. That daily fair value gap right here. This is what y'all came for. It takes time to build it up. It takes time to give y'all that perspective to understand and how to read price. This is what we will be doing once the CME futures contracts are live. But once they become more liquid, this is the type of trading we're going to be doing, because trading is universal. You could trade any market because every market does the same functions. Nothing is different. And what we're doing right now is just tape reading. If y'all want to be traders, you got to have patience. You got to be able to sit through this. If you want to learn how to do it the way I do it, it's no different than, clocking in at a job. You know what I'm saying? Like, sitting here watching this, you have to, what makes it exciting is the money behind it. Because if you couldn't make a lot of money with this, I wouldn't be, I probably wouldn't be doing it. But there is an unlimited, there's no limit to how much money you can make in these markets. No limit to how much you can make. No limit. Next thing I want to do is, since I'm intraday, I want to determine where the liquidity is in the market. So I'm going to look at what happened in the previous sessions. So this low right here, this swing low, that is the New York PM, that low formed in the New York PM session. And that is the lowest low of that session. Ask me how I know that without, I just know because I do this every day. I could just tell you when I'm trading, I don't have all this on my chart neither. This is just, once you're brand new, you're going to have all these things on your chart, but over time, you're going to kind of graduate from having all these things on your chart, and you pretty much can look for what you want to look for. Now, look at that right there. We just dropped down to that PD array right there. Yes, all that repetition. Y'all can get there too as well. You can get the same type of repetition in. Like, I remember having dreams about this, like just vivid dreams in my dream, watching candlesticks, how they print. And then once you spend so many hours repeating this process, and I've been doing this for years. So once you spend years and years in doing this, it gets real scary. I'm just going to tell y'all that it gets real scary. And you got to tell somebody. That's why I'm doing this live stream. You got to talk to somebody about this shit. You got to talk to somebody about it. You kind of can't hold this information in. You got to let it out. It'll be selfish of me just to hold on to this, because guess what? Most people ain't gonna gravitate to this. Y'all, shout out to y'all that's in here because y'all find this interesting. But most people won't gravitate to learning technical analysis, learning how. Most people can't even invest. Most people don't even like to invest their money. They like to spend their money. So imagine taking it to a sophisticated level like I'm showing y'all right here. I spend all day, I spent all day. Now I'm to the point now where I know what session I want to be in. But I remember spending every session, London, New York AM, New York lunch, New York PM, Asia, spending all those hours in every session every day trying to learn how to do this. But now I'm to the point where I just pick what time of the day I want to do this. Trump is Swan. Ditto boss. What that mean? Ditto boss. Speak English to me. What that mean? Explain what that mean. SBG Berries. He said, I spent over 6 years and I can agree with you what you said. I actually watch you only for the simple fact that we trade similar. And I respect your process. So shout out to you for real. Shout out to you, SBG Berries. I appreciate it. Shout out to you. And okay, I got you. That's what ditto means. Hey, I just gotta ask before I flash out. I gotta ask before I flash out. You know what I'm saying? I ain't trying to flash out. I'm trying to be respectful. So I had to ask because everybody different. Everybody comes from different parts of the world, and everybody lingo different. So I just gotta ask. I gotta ask, goddamn it. But I got enough respect to, ask before I flash out. Appreciate it, Big Dre. Appreciate it. And I didn't know this was my passion until I fell into it. I didn't know this. I grew up watching the Wall Street movies. I was always fascinated by Wall Street. I ain't know shit what about it. I didn't know nothing. I ain't know about stocks. All this came together from the universe. I'm gonna say that. I originally got into crypto back in 2017. That's when I originally got into crypto. I originally learned about Bitcoin back in 2010. But I was like 20 years old. In 2010, I was like 20. And again, it took somebody real on the spectrum. I'm gonna say that. It took somebody on the spectrum to actually go put their money into some Bitcoin in 2010. It took a special individual to have vision back then. So, it wasn't for me. I can tell you now, Bitcoin was not for me in 2010. And then throughout the years, you see people talk about it more. And then you keep seeing the price of it going up. When the price of Bitcoin was going up, I ain't know what it meant. I just know that shit kept going up from I remember seeing Bitcoin when it was like $2-3. And then, okay, whatever. And then eventually it was like a couple $100. And then I'm like, okay, whatever. And then I finally took interest around 2017. So it took me about 7 years. 7 years to be like, man, what is this shit? What is this? And then I finally jumped on Coinbase. So I was on Coinbase in 2017, 2018. And I wasn't all over the place. I was buying like Bitcoin Cash. Who remembers Power Ledger? I remember reading the white papers and all that, the IPO phase of all this stuff. What's Electronium? How many of y'all remember Electronium, Power Ledger, Bitcoin Cash? Litecoin, man, Litecoin was my shit. Litecoin was definitely my shit. Like, you couldn't tell me Litecoin wasn't the next Bitcoin. Litecoin was my shit back in 2017. But I've been in crypto for that long, and then guess what? I used to always see XRP at the top of that list. And at that time, again, I'm gonna say crypto wasn't ready. Crypto wasn't for me at that time. I was in it, and then I remember selling out of everything. So I remember buying Bitcoin at like $900 and thinking that shit was expensive then, $1,200. And I thought it was expensive then. I was buying fractions, not knowing that you could have bought whole Bitcoins. I could have got whole Bitcoins back then, and I would have been straight at this point. When I say straight, you know, probably living another lifestyle, living a different life. And I could have been getting it back then, but again, wasn't my time. And in about 2019, and the whole time during that those years, 2017, 2018, I ain't know nothing about technical analysis. I was going to Coin Market Cap and just watching. This is what I used to do. Let me come over here. Let's come to Coin Market Cap. 1 second. This is what I used to do. This website is old. This is a dinosaur website, and people still refer to it. But I used to come over here, and I'm sure a lot of y'all have done this as well on some type of platform, but Coin Market Cap, I would go off the prices of whatever they were showing on this website right here back in 2017, 2018. And you're pretty much blind to the world. You don't know nothing about nothing. You just say, oh, that's a cheap price. Let me go ahead and buy that right there. Or, I could get this for that. You know what I'm saying? And you're not knowing that this is like a feed to some type of chart somewhere. I would just get all my coins based off of pricing and not looking at any type of technical analysis. And then that leaves you in the dark, because if price goes lower, you're scared as hell. Like, damn, it's going down. Or price is going higher, then you're scared as hell it's going down. Or it's going, you just don't know. You're in the dark. And then you're over here looking at this over here, not knowing what the hell this is right here. And that was back in 2017, 2018 for me. I ain't know nothing about nothing. And then around 2019, I was on my entrepreneur phase, and I just wanted to learn. I did some entrepreneur things, and I had some short-term success, and then I had some failures. But then, okay, I said, well, shit, creating businesses is pretty hard. You know what I'm saying? Creating businesses are pretty hard, at least, at the time for me. And this is right before the pandemic. So if you can't create a business right now, or, business is hard, because one thing about business, you got to have a lot of capital, depending on what industry you're going in, what kind of business you're trying to run. I always had a thing of operating low overhead businesses, because it just makes sense. Operating low overhead businesses. So eventually I go on Amazon, shout out to Amazon University, because I got all kind of books. I was heavy on the books on Amazon, still am. And I started getting into that phase of, finding different skill sets. And then I ran across, let me see, what book I ran across. Matter of fact, I got it right quick. 1 second. One second. Let me do this right quick. I ran across this book right here. I don't know if y'all can see that. Let me see right quick. I ran across this book right here. It says, make it in the Forex market from $0 to $5,000 a month. This is the first book dealing with technical analysis that I ever purchased. I randomly seen it on Amazon, and I said, hey, let me go ahead and purchase this, because that sounds good to make $5,000 in a month. That sounds real good. And there goes the author right there. And that was the introduction to technical analysis. I never looked back. That was in 2019. I never looked back ever since. Eventually, I found a mentor. Eventually I found the mentor and I never looked back ever since. So that was lining up. And I started in the Forex market, and then I went to started in Forex, then I went to futures. And at the same time, remember, I've been knowing about Bitcoin and crypto for over a decade now. So it's been about a decade. I've been knowing about Bitcoin. I've been knowing about crypto. And at the same time, I'm learning this skill set, technical analysis, and XRP. So here it is about, let's say about 2019. I come back to the crypto and I'm like, why the hell is XRP? I didn't know nothing about the court case. I didn't know nothing about nothing really. I went away from crypto for a while. I forgot about crypto. And then I came back to crypto, and XRP was sitting there like pennies. And everything else was in the thousands of dollars. Bitcoin, Ethereum. And I'm like, why the hell is XRP still right here in the third, fourth, fifth spot, whatever spot it was at the time? And why is it only pennies? Now, remember I said I was doing a business, like I was in business. So in my journey of entrepreneurship and running little small businesses, I had to make swift transactions. I remember the first time I was selling products on Amazon. That's one of the businesses that I did. I used to sell high-end electronics on Amazon, and then eventually Amazon got real stingy, and they started restricting sellers from selling high-end products. I'm talking about Xboxes, PlayStations, JBL speakers. I'm talking about high-end electronics. Apple earbuds. So eventually Amazon started getting real restrictive on their sellers selling branded products. You have to be an authorized seller, but at one point you didn't. It was a wide open market, and then Amazon realized, Jeff Bezos realized, like, damn, these third-party sellers are eating too much off of our platform. They're eating way too much. And of course, they're the owners of the platform, so they can do what they want to do. But I was doing pretty good with that. And in the process of me doing that, I was making swift transactions from my suppliers. He said to call them up. I remember the first time I had to do this. I called my supplier up. I said, hey, I want about 100 Xboxes. And he'll be like, okay, I got you. We'll put the order in. And then eventually he'll be like, send a Swift code. And I was like, what is Swift? What the hell is Swift? And then he explained it to me. I said, okay, so you call your bank up, you tell your bank you want to do a wire transfer, a Swift process. And yes, that process took about 3 to 5 days. So I'm sitting like, damn, my store is empty. My Amazon store is empty. I need those Xboxes in my store so I can start selling them. But all of that was on pause because of the transaction that my supplier had to get the money before he could ship the products. That's how that goes. The supplier has to get the products. I mean, the supplier has to get the wire before they could ship the products. So that was my first time being introduced to Swift. Yes, I'm a small business using Swift. If y'all don't know, large businesses, large institutions aren't the only ones that use Swift. Medium enterprises, small businesses use Swift as well. And now, okay, that failed. I come back, and it didn't fail. I didn't like how Amazon was going, so I scratched it as I just took the L. I just said, hey, this ain't, Amazon acting funny. So because I had a lot of winners going on Amazon. I was doing good at one point. So eventually, I came back to crypto. I started learning technical analysis. I seen XRP sitting right there. And I was like, why the hell is it so dirt cheap? I need to be buying it. That's the first thing I said when it came to XRP. I said, why the hell is it so cheap? I need to be buying it. And then in the process of me buying it, I said, I need to learn more. The first time around with crypto, I didn't do a lot of research. Now it seems like it's a different market, and the market did change. All that IPO stuff was out the way. Lawsuit just began for XRP. I said, okay, they got a lawsuit on them. Okay, why is it so dirt cheap? And then boom, I started doing my research. And then the first thing that caught my attention was replacing Swift. Now I just told y'all that I have dealt with Swift with my small business. And then here we are talking about a cryptocurrency, a company called Ripple replacing Swift. Now I remember XRP when it was just Ripple. There was no XRP. So that's how long I've been in crypto. I remember XRP just being Ripple token. It was just Ripple token. And then they rebranded and called it XRP. A lot of everybody now know XRP, but I remember when it was Ripple, it was just Ripples. And then they rebranded, called it XRP. And I said I needed to get that. Look how price right here during the Asia session. Look how price dropped down to that daily fair value gap right there. Let me put up a split screen. Do a split screen. On the right side of my chart, that's going to be the higher time frame. Let me clean this up right quick. Yeah, I got a lot going on my chart, but we just dropped down to that daily order block over here on the right. We dropped down to that. Hell yeah, we need 100 of them things. What I was saying. So yeah, I came back to the crypto market. First thing that caught my attention with Ripple and XRP was replacing the Swift. That sent a red light to my head. I didn't hesitate because my experience with dealing with Swift was slow. It was a slow process. I never had transactions that failed. I'm sure that happens on like a higher scale, especially people that send transactions every day. They probably experience more failures with Swift, but it was slow. It was a slow process because it was holding me up. It's a rush once. Check it out. When you sell on Amazon, or if you have a product, you sell your product and you see it flying off the shelf. It's going fast. That's a rush. Like if y'all never experienced that, making that type of money so quickly, it's a rush. So only thing with retail and having physical product, the margins. You got margins that you got to work around. Like you buying low, trying to sell high, and trying to get your margin. What caught my eye with this technical analysis shit was there's no overhead. So when you have product to sell, you're either going to have a retail store, you're going to have a storefront, which that's going to cost you rent, office space, lights, all that, utilities. You're going to have office space. Or if you got an online store, you're going to have to pay for storage fees. Like, for example, you had to pay for storage fees on Amazon. Thing about technical analysis is there is no overhead. The only commodity that you have is capital, cash. And the margins are retarded as far as like, return on percentage returns. It's retarded. So to me, that sparked a light bulb to where that just triggered a light bulb. Like, forget selling products, forget trying to run a business. This is where it's at. That's the first thing that went to my mind. And even right now, if you learn this skill set and you know what you're doing and you're like an entrepreneur, you don't need to own no business. This is the business right here. The only thing you need is cash. And then we're starting to pivot into a new world where, okay, you're cash rich. Now you just need assets. So my whole mind frame changed when it came to dealing with these markets and whatnot. I got a whole different perspective on money. I got a whole different perspective on everything. You really don't need nothing. Like the rich, if you study the rich and wealthy, they own businesses, they own corporations, but they don't. They have other people running them for them. They have them under shell companies. So they're really not in the business. They own businesses like assets, but they're not physically in the business, not managing. Like Jeff Bezos. Jeff Bezos isn't at Amazon. He owns Amazon, but he's not physically on the day-to-day. He has final say, but he's not physically day-to-day hands-on with Amazon no more. He's past that. Jeff Bezos is trying to buy assets. And if you study the rich, that's what they're doing. They're buying assets to increase their net worth. So hopefully that little story right quick about my little crypto journey. You know, everybody got their crypto story. I like to hear people's crypto stories on how they came about with this. And some of y'all are just coming to crypto. Some of y'all are just coming to crypto. But I've been here for a while, man. I've been in crypto for a while. But and something always told me to stay with this shit. Like it's always been like a voice in my mind that always told me, even back in 2017. Even back in 2010 with Bitcoin, it was very fascinating to me, but I could not understand that shit to save my life. I could not understand what cryptocurrency was. I could not understand it. I could not understand that shit for nothing. But digital currency in 2010 was fascinating. Just learning and just hearing about that. It's like, man, and even back then, I wasn't dealing with cash like that. I'd never been a person who carried a lot of cash on me. Because it was, to me, it was always convenient to, you know, just operate with a debit card or a, you know, a credit card or whatever. It was just always simple. And then once, you know, pay to touch, you know, tap to pay came out, and now we're paying with our cell phones and all that. It's just way more convenient. It's way more convenient than carrying a bunch of cash on you. But what I'm doing right now is I'm setting up my chart. Well, I'm just showing you what we had done so far today. And what I'm looking for is the liquidity in the market right now. So again, we're just chopping around right here during the Asia session. So if we go back and look at what happened earlier in the day, we look at the lunch hour that created a high right there. So I'm going to highlight that high. I'll take this trend line right here. That's buy side liquidity from the lunch hour. So later on tomorrow, because I'm bullish, later on tomorrow, I can anticipate that we can potentially rise up and reach for that high. And then at the end of this session, which is the Asia session, we should be able to determine the high and the low of the session. So I'm going to be looking for this to be the high. And y'all in the chat, I just explained this to y'all. This is the Asia session. Here's the swing high. This is potentially the high of the session. Once this forms, or let's say this is the high of the session right now, what is this in relation to this right here? I just told y'all. Damn, 1 second. But anyway, I just told y'all. What I just outlined a few moments ago. This high right here during the Asia, this high during lunch. What is that considered? I just explained that to y'all. What would that be considered? Y'all let me know in the chat. What would that be considered? I just told y'all not too long ago, so I'm just trying to test y'all memory. This is a pop quiz, so welcome to class. If y'all are just joining, man, make sure y'all hit that like button for me. If you're a new subscriber, I appreciate y'all subscribing. If y'all are interested in learning how to do technical analysis, click the link in the description below. So nobody answered. So like I said earlier, this is relatively equal highs. So if this high right here forms, and that's the high of the Asia session, that will be relatively equal from this high right here during the lunch hour. And like I said earlier, whenever you see highs or lows stack up, that's a strong possibility that price would want to reach for that liquidity because they're stacking orders above or below the market. It is 9:43. Here in a few minutes, we will begin the 10 o'clock hour. So 9:43 p.m. Eastern Standard Time. Here at 9:50, we will begin a macro. So a macro is the last 10 minutes of the hour and the first 10 minutes of the top of the hour. This repeats every hour at the end of the hour and at the beginning of the hour. So we can be anticipating that coming up here in a minute. During this hour so far, we traded down lower to this daily order block. And let's see what we want to do. We got relatively equal lows right here. You see these lows? Those are relatively equal lows. We can potentially trade down to that as well. We could potentially trade down to that. But look how price drops down and respects this order block, this trend line. Look how price drops down and respects that. 1, 2. Look at the precision. See that precision? Can't make that up, man. Can't make it up. But now let's see if we want to come down lower. And tomorrow, I'll probably go live tomorrow. And let's see if the futures starts trading. It's live right now, but it's not trading live. So we're gonna look into that. We recently just traded up into this 5-minute SIBI right here. So I'm gonna highlight that right there. 5-minute SIBI. Sell side and balance, buy side inefficiency. Uh, 5 minutes, and then we will begin that macro. So in 5 minutes, we will begin the macro. These two vertical trend lines that are white. These two vertical trend lines that are white. In between them is the 9 o'clock hour. So I'm just focusing on this window in time within the hour. Every hour has 4 quarters. So from 9 o'clock to 9:15, 9:15 to 9:30, 9:30 to 9:45, 9:45 to 10 o'clock. That is the 4 quarters in the hour. And then if I drop down to a lower time frame, like the 1 minute, every 15 minutes, you can find some type of trade set up. Every 15 minutes. Every 15 minutes, price will allow you to find at least one trade set up. They're not gonna tell y'all that. They're not gonna tell y'all that when they say price is algorithmic. Who else is gonna tell y'all that? That's what I mean. Who else is gonna tell y'all that? Price is algorithmic. Every 15 minutes, you can find at least one fair value gap. But right now, during this hour, price is in a high resistance condition. High resistance. I will potentially be waiting because the move was down to this order block right there. Boom, just like that. That was the move. You see the sell-off? High resistance sell-off down to this order block. We trade down there. Look how it respects it. And then we displace higher. Now I'm looking at this right here. This BISI right here. There's this hole right here. I'm looking at that right there. This is a 1 minute fair value gap. I'm going to highlight it right there. That's a 1 minute fair value gap. Give it another color. See that right there? We trade down into it 1. Come back up higher to this 5 minute fair value gap. We come back down lower. And now we're just waiting. Do we want to continue lower or do we want to come higher? Market is in a high resistance consolidation right now. High resistance consolidation. Let me zoom out to the 5 minute. As you can see on the 5 minute, you can see the clear consolidation. Here in 3 minutes, we will begin the macro. So 9:50 to 9:50 to 10 o'clock. Excuse me. 9:50 to 10:10. That's a 20-minute window in time. 20-minute window in time. Y'all smash that like button for me. Let's go ahead and look at some of the rest of the market. Let's go ahead and look at the rest of the markets. I want to look at Bitcoin right quick. Bitcoin. This is the all-time high right here for Bitcoin. I'm gonna highlight it. That swing high right there. That's the previous all-time high. That is a high of $109,000. $109,000. Above that high is liquidity. We just opened up the new week of trading right here. If y'all watched my last live stream or previous live stream, I said, hey, once this candle closes, there will be a weekly fair value gap right there. Boom, just like that. Weekly fair value gap. Price can potentially trade back down there, but price is very strong. Look at these consecutive candles. After dropping down to a 3-month fair value gap, they quickly and rapidly reprice price higher, reprice Bitcoin higher. And now it's seeking the liquidity above the market right there. So I told y'all a week or two ago, I said, don't be surprised if Bitcoin in a week or two breaks its all-time high. And we're not far from it. We're just right under it. We're only about $3,000. We're about $4,000 right under Bitcoin's previous all-time high. So we're right there. So I'm gonna ask y'all in the chat. We already this week so far, we already opened up so far and took out last week's high. Now we're retracing. So in the chat, do y'all see price coming back down to take out liquidity, last week's low, and drop down into this BISI? Or do y'all see it coming up, taking out the all-time high this week? Y'all let me know in the chat. Don't let us get some type of stablecoin regulation. Bitcoin is gonna break out. If we get those regulations, y'all in the chat, y'all, what y'all think this week? Y'all think we get it? Do y'all think we get the regulations this week? Hopefully so. Barton K, you say low to high. Let's come back over to XRP right quick. B Rush, you say you think it's hard to say. Just this bill passing this week won't put it into law yet. Okay, for sure. For sure. We will see, man. We're gonna see. We're currently in an environment where expect the unexpected. That's what I say. We're in an environment where you can expect the unexpected. What's up, Catch Up? I wish for regs, but I think the soonest would be the end of the year. The soonest will be the end of the year. What y'all think about that? The soonest, the end of the year? I'm gonna leave that to y'all, man. I'm gonna leave that to y'all. I have no opinion on it. One thing I do know though is CME Futures going live, and that's all institution right there. That's all institutional capital right there. CME Futures going live, and that's very telling. They're doing that all. See, my first belief and opinion was we didn't see none of these products until regulations. But boy, was I wrong. I mean, I didn't come out publicly and say that's what I expected, but in the back of my mind was we got to have regulations before we start to see ETFs and futures. But nope, institutions want those futures right now so that they can come over here and trade this market. They want to come over here and trade this market. And if y'all just joining, if y'all interested in trading futures and you need a broker, go to tradestation.com. That's a broker that offers micro XRP and XRP futures contracts. So Trade Station. That is not a paid advertisement. That's just me. I've been using them. They're reputable. They're regulated. And that's what they do. Said y'all all in for an earlier date. What's up, superhero Hayes? He says hopefully by August. Yeah, Donald Trump said he wants that on his desk by August. We shall see. Price currently consolidating. We are in the macro. It's 9:53. We got a consolidation going on inside of the macro. The real move should play out after the macro or during the macro. So let's see what they want to do. Do they want to reprice it higher? Because I am bullish. I'm very bullish. Or do they want to drop it back down lower into the order block? You say, so does the XRP futures market push the price for the spot XRP price? Let me see if I got this video pulled up. Y'all give me 1 second. It's from the the former CTFC chairman, futures chairman, excuse me.
And is found in the same numbers in both men and women.
I gotta find the video. Let me see if it's pulled up.
I find it important to your life.
Okay, let me come back to the charts, and I'm gonna find that video right quick. Find that video right quick, and then we're gonna talk about it, because a lot of y'all didn't catch it, and that's okay. But yes, he pretty much said the former CFTC chairman, which is the regulator over the derivatives and the futures contracts, he came out and said the commodities get price discovery based on the derivatives. So the derivatives markets set price discovery for commodities. If you don't know, XRP, cryptocurrency, they're commodities. Why do you think they price so high for the futures contracts? If we compare, I'm gonna compare that here shortly. Let me look up this video. It is right here. Let me come back over here. One second, y'all. 1 second. 1 second. This should be acting crazy. 1 second. Trying to pull it up. All right, I'm about to play the video. I got to pull it up. Cut the music down. Cut the music down. So this is from the former CFTC chairman. The prices of cryptocurrencies will set the derivatives market. And then the question is, what are your thoughts on cryptocurrency? This is the question for the former CFTC chairman. And this is what he's got to say.
As I explained to your audience today, I see crypto as much more than just a new asset class, but really a new architecture of finance, a new way of establishing who owns what and who's transferring what to whom, using the internet as the basis for establishment of that value, as opposed to the individual balance sheets of proprietary institutions. It's a new architecture, a new protocol for establishing value.
The next question they ask him, and this is the important question that they ask him, they say, what about the derivatives of crypto? And listen to what he has to say. Former CFTC chairman for the Commodities Futures Trading Commission.
In any commodity market, the price of the underlying commodity is actually not set in the physical or the spot market. The price is set in the derivative markets. Mature derivative markets are essential for price discovery because it's the one place that all the buyers and sellers can come together to agree on price. That's why the price of gold is not set in a jewelry shop. It's set in the derivatives market. The price of wheat is not set at a grain elevator. It's set in the derivative markets. The price of oil is not set at the gas pump. It's set in the derivative markets. So establishing well-functioning, healthy derivatives for crypto will provide a solid basis for price discovery and price setting for crypto.
So did y'all catch it? There y'all go. Did y'all catch that? He told y'all the price is not set on the open market. So they got a lot of people that think supply and demand. No. These markets are not set by supply and demand. There's going to be a supply and demand for the utility aspect, but these markets are set by the derivatives market. The price of gold isn't because they're digging the gold out the ground and they're storing it. No. The price of gold is set by the derivatives markets, the futures contracts, the debt market. Because think about it. You got large banking institutions. Not all of them hold gold. Not all of them can, like, for example, a large bank, they can't just store oil and own oil and, control the price of oil. No, but what they can do is create a product and bet on the direction of it and make a lot of money on it. That's what they do. So hopefully y'all understand that the derivatives markets, and then I just seen a content creator pretty much saying, oh, that's not what happens. And then he asked ChatGPT, and ChatGPT was breaking it down to him. And he was like, well, damn. So yes, I've been in this market before all of this became a thing. I've been pushing people to trade futures from the CME for years because I've been in this market. I already know about it. I've been in these markets already. I already know about these markets. I've already understood that central banks control everything. They control things due to derivatives. Big money is here. If you don't know, and I'm not messing with you, Mark, but if you don't know, big money been here. They've been in these markets. All of this has been planned already. They've been here. They never wasn't here. They always been here. Why do you think the price of these markets are so controlled? Why don't you see XRP at $120? They've been here. They've been here. So they've been here. They've been in these markets. So that was big news for y'all though. I've been playing that video for a while now because it's straight from the horse's mouth. It's straight from the former commissioner's mouth that the markets are set by the derivatives. The markets are set by, why do you think this futures product going live is a big deal? Brad Garlinghouse kind of ignores questions about ETFs. ETFs are cool, but ETFs are not the futures in the derivatives markets. Get that understood. It's not the same. It's not the same. He had to come out and make a big announcement about futures from the CME. And again, it's not that I'm the smartest man. I'm an average person. Trust me, I'm an average person. It's not that I'm the smart. It's about timing. It's about who what you do, what you know. You don't write somebody off by their skin color. You don't write them off how they talk. You don't know what people be knowing. I be sitting over here by myself like, damn, I wonder if I'm making sense to these people, because some of y'all might watch my channel and y'all might be like, oh, what does he know? You might look at me and predetermine or judge what I know, which I ain't concerned about that. I don't give a damn about that shit. But you never judge. You don't know what people know. You don't know what kind of information people know. I study this shit full time. I study these markets full time. I try to get an advantage on all of this a full time. I want a lifestyle, a career out of this. I know what kind of lifestyle you can live by just trading these markets. Rolling up like, so for example, I get off this live stream. Let me show y'all right quick. Let's say I get off this live stream and I stay up overnight till 12 o'clock midnight. 1 second. I'm trying to look for a trade example, which we don't have one right now. Let me see right quick. Anyway, I don't have no good example. But for example, let's say I get off this live stream and I stay up until about 1 to 3 o'clock in the morning. That will be London session. And let's just say I find a trade opportunity during the London session, for example, right here. Matter of fact, I do got an example. So here goes the London session right here. I want to look for a buying opportunity. It's roughly on my time in the United States is 1:45 in the morning. And I'm up. Y'all tell me in the chat, what is this right here? I see this pattern that forms, or this PD array. It's a discount. What is that considered right there? Y'all tell me in the chat. It's 1:45 in the morning. And I'm looking to find a trade opportunity. And I'm looking to target these highs over here, these equal highs right here. Yes, y'all are correct. Bullish order block. So I'm looking to trade, and we're going to put some real money behind it, like the futures contract for XRP. We're going to put the price behind it and the figures behind it. So I'm just randomly up on a Sunday morning, 1:45 in the morning. I see this order block forms. I set my limit order. I set my limit order at the opening price of that order block. Boom, right there. You see how price drops down into that. 1, 2. You got 2 opportunities to pull the trigger. Stop loss. You want to always use a stop loss. Right here at the low of the order block. That's where my stop loss is, at the low of the order block. You see that this wick, it doesn't come down. This might scare you, but it doesn't come down and tag you out. So you're still good with the trade. That's a tight stop loss as well. So what I'm going to do is I'm going to hold that. I'm going to go to sleep. I'm just randomly up 1:45 in the morning. That's what time that trade set up for him. I pull the trigger and then I roll over, go to sleep. And then I don't wake up until New York session during the AM session. So once I wake up, let's say I wake up around 7 a.m. I went to bed at 1:45 a.m. I wake up at 7 a.m. I barely can see. The glare from my phone is real bright. You know, you wake up in the first thing in the morning, you try to look at your phone, and you're blinded by the light of the cell phone. Well, once that clears up after a few minutes, and then I finally can see that, oh, I'm in profit, and we're almost at my take profit, which is previous day's high. This high from Friday. I'm just holding my trade. Boom. We go up there. It triggers the exit. I think that's random. We go up there, trigger the exit. And then, hell, I'm just waking up. I'm just really getting up. And my day is over with just like that. I'm just getting up. My day over with just like that. And then let's put some real figures behind it. So I'm going to do this right here. I'm going to show you this long position tool right here. I'm going to place it at the opening price of that order block right there. This pretty much measures your trade position. You can measure your trade position, your take profit, and your risk. So my stop loss, everything in red, that's down here, that's 42 ticks. 42 ticks for XRP. We're gonna calculate the XRP futures. And then my take profit was up here, which is 622 ticks. So if we come over here to the CME website, right here, you see the CME XRP Futures live. I'm not worried about that the price is 240. I don't care about that. We're in here trying to take opportunity right now. We're trying to live a certain lifestyle. Let's go to specs of the contract. We zoom in. The minimum fluctuation in price right here. Every tick for XRP is, every 1 tick is $5. So every 5 ticks is $25. So y'all do the math in the chat. Y'all do the math. It's a Sunday. I woke up. Stayed up late Sunday night, like most of us do. I took a trade, and then I went to bed. And then the following morning, we took profit, 622 ticks. So y'all calculated it. Y'all are telling me $3,110. $3,110. Let's see how long that trade took. I'm gonna measure it from entry right here to take profit right there. That trade took 8 hours and 51 minutes. That was an 8 hour. That's a day trade. That's not a scalp. That's a day trade. That trade took 8 hours and 15 minutes. 8 hours and 15 minutes. So, like I said, we stayed up. We had fun with our family on Saturday right here. Price just consolidated, but we stayed up a little late. We done with the day. We put the kids to bed. You put your wife to bed. And then, you know, when I say put your wife to bed, y'all should know what I mean. You put your wife to bed or your girl, whatever you got. And then, you know, we in the charts, you know what I'm saying? We in our man cave in the charts, and we looking for opportunities because our mind is always on the money. Our mind is always on the money. And it's 1:45 in the morning, and you see the trade set up for me. You enter the trade, and then you go to bed. Now, you got to be comfortable with your risk. But you're going to bed knowing you're taking that risk. So by the time you wake up, you're in profit, and then price goes to your take profit. That nets you $3,110. But check it out. This is futures trading. So depending on your equity, now I'm about to blow y'all mind, and this is what institutions do. This is what institutions do. Let's say we want to be done for the week. Let's say we want to be done for the month. There's one trade on a Sunday, a random Sunday night. We want to be done for the entire month. We want to play. There's no limit on how many contracts you can put on a trade. There is no limit on how many contracts you can put on one trade. So that's just one. That's one contract. That's one contract that nets you $3,110. Now let's just say, because we got an account with $500,000 or $100,000 in it. Let's just say that. I'm gonna say that. Remember, if we come back over here to Trade Station, y'all go sign up for Trade Station. If we look at the minimum, the initial day trade requirements, they want you to have $64,000 in the account. They want you to have $64,000 in the account just to trade XRP futures, not the micro, but the larger contract. But let's just say we got $100,000 in the account. Well, that overshoots our requirement, so we're good to trade it. So we got a $100,000 in the account. We're good to go trade XRP futures. We just netted 622 ticks on one contract. Now let's just say we add. Check it out. We want to be done for the week, done for the month. Add 10 contracts. What would be the return? 10 contracts on a random Sunday night. 10 contracts. Y'all got y'all calculators out? Shout out to you, Lawrence. Shout out to you, Daryl. Some of y'all, what's the movie Paid in Full? Y'all acting like, is your neck twitching? Can y'all do math? You know what I'm saying? Can y'all do math? Y'all don't think that's possible? Shout out to you, superhero. Barton K, what are you saying? 155 for a micro. What are you talking about, man? What are you talking about? I think your math is a little off. Let's pause right quick. We're gonna come back to this. We got to get Barton on the same page. You're saying 25 cents per micro. What are you referring to? I need you to come to the front of the congregation before we move on so we can be on the same page. Everybody else understands it because we're using the real figures. We're using the real math. We're not getting it wrong if we're coming directly to the the CME, and we're telling you what it is, the spread. We're telling you exactly what the spread is per contract. So where are you getting 25 cents per contract for micro? Oh, my bad. I apologize. You talking about the micro. So I didn't see that part. No, let's check it out. We're just saying, okay, let me correct myself. And I know a lot, I already said earlier, you might have came in late. I said majority of us, let's come back over here. When I give my signal service, I'm not going to lead everybody down to the XRP large contract. We're going to start off in the micros. Even me, I'm not having a $64,000 account right now. I don't have $64,000 in the account right now. Not right now. I eventually will. Not right now. $64,000 in the broker account. My thing is, I always had the rules of $25,000 to $50,000. So I need to get to a point where I can put $100,000 in an account. This is what I do with my futures accounts. I have some with 10,000, at the most 25,000. 50,000 was always my goal, having a $50,000 account in the broker's account. But then dealing with this crypto, I'm like, okay, I need a $100,000 account. I need $100,000 in the broker account. And then seeing these XRP futures, that definitely makes me say, yeah, I need a $100,000 brokerage account with the for the futures market just to trade this. But that's okay. That's a long-term goal. That's a future goal of mine. I know people with $1 million accounts. Now, I wouldn't keep $1 million in the broker account, but some people do. when we start, we're going to start with the micros. We're going to start with the micro futures. I'm just giving y'all perspective later on down the road once y'all become millionaires with XRP and y'all learn the skill set and y'all are comfortable with going to trade. Like once you become a multi-millionaire and start seeing millions, $100,000 I ain't gonna say there's no money, but you can easily pull that and go fund it into these accounts. You can treat these broker accounts like savings. That might be something y'all never heard of. These broker accounts, you know how your money is sitting in the bank like a savings, is not earning you interest. Now compare that to somebody who has the skill set to go print out their own interest every month. So some of y'all might have a $25,000 savings account, $50,000 savings account, and the money ain't doing nothing for you in that account. But you go pick up the skill set on learning how to trade and technical analysis. Now you pull that capital from your bank account and go put it in a regulated broker. They can't run off with your money. They will be sued. They can't just do anything with your money. They got to abide just like a bank. Brokers got to be regulated just like banks. So it is another bank account. Broker accounts is a savings account. The only difference is now you got, see your bank, check it out. Your bank doesn't offer you these products. They just offer you a savings account that don't do shit, or they might offer you whatever other products they offer, but they don't offer you a list of products that you can go take risk with. So you go to a broker account. This broker right here is TradeStation. We go to the broker. Now we got a list of products, not just crypto neither. I don't stay in the crypto market. Y'all might got me a little confused. I do all markets. I follow all markets. I mainly stay in the NASDAQ, S&P. But now that we got futures coming out, crypto futures, now we can branch off a little bit. Look up here at the top of the list. You got energy markets, you got metals, crypto, interest rates, currency, softs, meats, agriculture, index, euro indexes. So many different products that you can go trade. You can go trade cattle. You can go trade the interest rates. You can do all kind of shit with these markets. Your bank ain't gonna offer you this. But you gotta be savvy. You gotta be skilled. You gotta have a skill set. Go click the link in the description if y'all want to learn how to trade. That's the Patreon. Go get those beginner lessons. And then eventually I'll be offering my pro lessons. And then eventually I'm coming to start offering signal services. So y'all sign up to the Patreon. Link is in the description. But back to Barton, I understand what you're saying. We're going to start off with the micros. All you need is $3,200 to start micro trading XRP. $3,200 with this broker. Every broker got different pricing though. But with this broker, you just need $3,200. But once y'all become rich with crypto, XRP millionaires, then we can go looking at this larger contract, 64,000. And this larger contract is what I'm using for this trade example right here. That larger contract is what I'm using for the trade example. And we added 10 contracts. First of all, we added 622 times 5 because it's each tick is worth $5 for that particular contract. 622 times 5. And that was $3,110. Now I'm telling you, because you got a $100,000 account, you can go ahead and add 5, 10, however many contracts you want to, depending on your equity. Now there's a threshold because you might not have enough equity to take out 20 contracts. I've seen people, my mentor does this all the time. He will go take out 30, 40 contracts at one time and make over $100,000 in one day. I'll say that for another day. I've even showed y'all during the live stream. I know people that can go make 6 figures in a day. This world that I'm showing you and talking about, this might not register to you, but this is what's going on every day. You know how much liquidity and capital is flowing through these markets. Y'all can't imagine how much it's the derivatives market. Do you know how much liquidity and capital is flowing through these markets from retail traders? Not just institutions. We got high net worth individuals in this market making six-figure weeks, 6-figure days. So what do you think the institutions are doing? They're making millions. They're making billions per day. So it's not far-fetched for y'all to go in here and bank 10 contracts and make over $31,000 in one day, in 8 hours. I never traded oil. I never traded oil because oil is very volatile. I don't like how oil trades. That's just me personally. And like you just heard from the former CFTC chairman, he said the prices of oil at the gas pump aren't set by the supply and demand of oil. It's set by the derivatives. It's set by the futures trading of oil. I'm trying to pull oil up right quick. Right here, crude oil. This is crude oil. And let me see right quick. Crude futures. Right here. This is the current contract for crude oil. And you can see crude oil very choppy. It's really like, it's just whatever with oil. And it's currently $62 per barrel. And it's highly manipulated. And they control the prices at the gas pump based on the futures contract. So you traded 5 contracts with a $3,200 account. No, I did 10 contracts with the $64,000 account. I'll just use that as an example. Yes, you can trade. So for example, if y'all got $10,000, let me come back over here. If you got $10,000, the minimum these are the minimum requirements that I'm showing you for the micro and the larger contract, XRP contract. The micro for this broker, every broker is different. Like for example, Robinhood might have different requirements. You got to go to different brokers to get different pricing. They all are different. They offer different things. For this broker right here, the initial requirement for the micro XRP is $3,200. That's the minimum requirement. Me personally, I'm going to have $5,000 to $10,000 in the account. With that type of equity, $10,000 equity, you can go trade multiple micro contracts, not just one. So the same thing applies to the larger contract, the 64,000 minimum requirement for the XRP futures contract. That's the larger contract. Well, if they require you to have 64,000 in the account, you might as well have $100,000, 100K in the account, 80K in the account, 100K in the account. If you want to go trade this, you can have $100,000 in the account and go trade micros. So you need to have the established amount for each contract you buy. Yes. Yes, Daryl. Yes. And there's nothing wrong with micros. Again, I make a lot of money trading micros. And guess what? I trade one contract. Every trade I take is one contract. I don't feel the need to add multiple contracts until I get better. Again, I'm still in the process of getting better and working on myself. Yeah, there you go, Barton. You crunching the math over there, Barton. Yes. That's why I say the micros are powerful. I love micro contracts. It's affordable. People say smart money don't want you in these markets or whatnot. They say that, but they are looking out for y'all by giving y'all micro contracts. They're not making it exclusive just to them. No, they're allowing the smaller players to play. Because at the end of the day, it's liquidity in the market. They want it all. They want all that capital in the market. Because either you're going to be liquidity or you're going to be on the right side of the market. And that's what I'm teaching over here. Some people are saying like futures is gambling. And that's if you look at it like that. Every trade is, you got to have risk management. So y'all in the chat, what have I told y'all before? Risk management. What are my protocols? What are my rules when it comes to how many trades I take per day? How many trades should y'all take per day? Some days you're not going to trade. For example, like this Sunday right here, I can, like, for example, Saturday, this day right here. I can trade in this. I can trade in this environment right here. But I'm not going to want to because of the price action. This environment right here that I'm highlighting. Daryl, you said 2. That's what I say, 1, 2, 2. So if you have one successful trade, don't get greedy, especially if you're brand new and you don't know what you're doing. Don't get greedy. Take your one trade, whether it's a winner or a loser, and walk away. And that's for somebody who don't even know how to trade and taking risks. That's considered risk management. Risk management. You got to have some type of risk management. The number one rule, check it out. Y'all write this down, embed it in your mind. The number one rule in trading is capital preservation. Just like in boxing, boxers, the number one rule is to protect yourself at all times. The same exact rule applies to finance in these markets. Protect your capital at all times. Don't feel impulsive. Protect your capital at all times. That's the number one rule. I know I don't touch on that a lot up in here, but I always apply that. I don't just jump in and, no. Protect yourself at all times. So let's say you start with $10,000 in equity. You want to be patient. You want to look for the best trade setups, and you want to protect that equity. Don't go trading 5-6 times a day. No, you're going to blow your account. Trust me. You're going to blow your account. Risk management is taking 1 to 3 solid trades per week. That's another one I haven't told you. 1 to 3 solid trades per week. Some of y'all might not be. Y'all gonna see that money rushing. Y'all gonna see how easy it was to make $1,000, and you're gonna be like, man, I need to do that again. No. You're trying to, let's say you start with 10K. You're trying to compound that $10,000 every day. You're trying to compound that. You're trying to go slow too. You're not trying to rush to do it. You're gonna let compound interest do the work for you. So you're gonna take 10K. You're gonna go seek the low-hanging fruit every day. Those low-hanging fruit objectives. You're gonna try to get those small winners and let that 10,000. So you go from 10,000 to 10,200, 10,200 to 10,800, 10,800 to 11,000. You're gonna get those small winners every day. Be content with your winners, and you're gonna slowly compound. And then eventually, let's say you go from 10,000 to 20,000. Now that compound interest effect starts to multiply. You know what I'm saying? That compound interest effect starts to multiply. Now you from 20,000 to 45,000. Now, once you get to 45,000, you can take out multiple micro contracts. And then those multiple contracts, you started off by trading one contract, and now you're trading 2 contracts per trade. You get it? So each trade. So for example, if you work your way up to 2 contracts per trade, you're still taking 1 to 2 trades per day. The only difference is you're able to go put on 2 contracts at one time on one trade. And then that compound interest effect starts to take in place. So you go from 45,000 to 55,000. And then eventually you work your way up to 3 contracts, but you're still taking 1 to 2 trades per day. 1 to 3 trades per week. Does that make sense to y'all? I'm just asking. That is calculated risk management. That's something you have to be taught. And again, you can't be impulsive. What helps you determine, okay, that might sound good, but hey boss, what okay, I understand that, but when do I look for a trade? Like, okay, if I'm looking for 1 to 3 solid trades per week, when do I take them? When I see trades all day. Well, look at today. You take them during certain times of the day, not at random times of the day. You wait for certain times of the day. London session, New York session, the New York AM session, the New York lunch session, the PM session. Once the PM session ends, you shouldn't be looking for no trade because you're not inside of a kill zone. And then we wait for several hours from 4 p.m. all the way to 8 p.m. Asia session begins. Now, potential opportunities in the market. For example, right here, during the Asia session, we waited all day. We missed all day because we were spending time with family. We waited for a certain time of the day, Asia session, because during these times of the day, that's when the liquidity picks up. That's when the volume picks up. We see a SIBI form right there. We trigger our entry. We short down to take profit right there at the top of that order block, this trend line. So let's measure how much that was. From entry right here down to this trend line right here, which is that daily order block. That is 240 ticks. Y'all do the math. Y'all tell me what it is. And don't forget your stop loss. We always got to have risk. So our risk is 89 ticks. That's our risk at the top of this fair value gap right here, this wick. That's where our stop loss is. We got the SIBI. We got our entry. We short the market. Boom. Down to take profit, 240 ticks. What is the math in the chat? You said $60? Let me do my math. Every tick is $5. You might be doing the micro. Okay, you said the micros. Again, I'm going to be focusing on micros. We're going to focus on micros because, again, making $60 and it took, let's see how long it took. $60 and it took 30 minutes. So, again, to go make $60 in 30 minutes, that's damn good. You know what I'm saying? If you can do that on a weekend and it's the evening time and you know your day is pretty much over, that's a beautiful thing. Now let's add the larger contract because you're going to get to the larger contract one day. You're going to be able to get up to that larger contract. Hell yeah, I'm going to take it too. $60 in 30 minutes. Some of y'all jobs don't pay y'all $20 an hour. So yeah, $60 in 30 minutes. And then guess what? Check it out. After you take that trade, you're done. I'm going to say done for the session. Don't try to get back in there and be greedy. After you take that trade, that's your one opportunity. Be done for the day. That's your one trade for the day. Now wait for Monday. Wait for Monday. There you go. If you want to multiply contracts, that's 180. Let me see right quick. 5 times 240. So if this was the larger contract, check it out. If this was the larger contract for XRP, again, a lot of y'all going to be able to have this capital. So don't doubt yourself. First of all, learn the skill set. Sign up to the Patreon in the description below. Sign up to the Patreon. Then learn the skill set. Once XRP goes higher, y'all don't doubt yourself. Y'all going to be able to have 6 figures to go play with. I'm telling y'all, not just play with. You're going to respect the money, but you're going to be able to have 6 figures to go put in an account to go trade futures. And then all you got to do is fund the account, 100K. They require you to have 64,000. Put the 100K in the account. And now you can go take these managed trades. All you're doing is trying to manage. You're managing money. Essentially, you're becoming a money manager. And you're managing $100,000. We trade up into this fair value gap. We trade lower. We trade in the larger contract. And the take profit was at 240 ticks. And that is a profit of $1,200 in 30 minutes. $1,200 in 30 minutes. So that's the small wins that I'm talking about. You have $100,000 and you're taking the small wins of $1,200. So all you're doing is just adding the $1,200 to your equity. 1 second. Yeah, you're just adding the $1,200 to your equity, and that's $120. Excuse me, I'm tripping. 1 second. I'm multiplying it. My bad. So you're managing $100,000. You go take profit, make that small winner $1,200, and that's a profit of $101,200. And you're just going to slowly grow your equity over time, and you're going to just watch your equity go up. And at the same time, you got your digital assets in cold storage or with an institution somewhere, and you're earning interest on that, and you're just getting money in all directions. So hopefully that makes sense to y'all, man. We're gonna continue to go over this more and more. I'm gonna let y'all go this evening, but I definitely appreciate y'all joining. I'm gonna go live tomorrow. We're gonna continue this, and we're gonna see if this contract right here, this let me see if I got it pulled up. This XRP CME Futures, it just went live. It's official tomorrow. I'm gonna say during the New York session, it's gonna pretty much start trading live, but CME Futures is live. But I appreciate y'all joining, man. Y'all click the link in the description for the Patreon. Sign up to that. Get those lessons in. Click the like button if you're brand new. Subscribe to the channel, and we're gonna get back to this on the next live stream. I appreciate y'all joining. Y'all have a good evening. Thank you.